Good morning, Waziri.
Good morning.
We thank you very much for joining us again. You first came here when we were doing the first show.
I started the show.
You started the show.
This is my show.
Very good.
You can be. You're a fixer.
I was taking it.
Yes.
So Jano is going to start us off with the day's quote.
Yeah, just some quick reflections from you, Waziri. The quote is by Nelson Mandela, because 12 years ago today he died. Was the date of his death.
Really?
Yeah, we are not free. We have only achieved the freedom to be free. He said in 1994, we are not free. We have only achieved the freedom to be free. What do you think he meant by that?
Well, I think what that icon meant is that South Africa was not free as at the time he was speaking. Why? Because freedom means a lot. Freedom is not just about pronouncement of self-rule, but rather it includes political freedom, which would encompass all the human rights, economic freedom, freedom from hunger, freedom from many other economic challenges, and also even social freedom. So that was a journey that was just beginning. So he was telling South Africans that we have at a point where now we have to fight to free ourselves from all these challenges.
Yeah, to be free. Yeah. Okay.
Good one.
Yeah.
So this announcement came the day before yesterday on the new deal between Safaricom, between the government and Vodafone for Safaricom. And, you know, there's been a lot of reaction. One of the reactions that we have seen online is somebody saying, and I would like you to answer this question, this government is selling off the family silver.
I have actually heard about that comment many times. First of all, let me put it very clear that the process has just begun. This is what we call, this process will take 4 stages. And this stage is what we call proposal initiation. It's the very beginning of the process. From there, it will go to approval stage, where the National Assembly has an input and other regulatory bodies like CMA, Central Bank, and the Competition Authority, all these other bodies will now look at the legal framework and assess whether the transaction meets the threshold. From there, then it goes to the 3rd stage, which will now be the execution, where the details now will be agreed on. And the final stage will be receiving the proceeds and reporting. Again, that report will go to the National Assembly, will go to the Controller of Budget, will go to the Auditor General, and finally to Commission on Revenue Allocation. So we have just started a process, and what we have done is to make this process as transparent as possible, ensuring that that transparency is seen from day one. And that is why that announcement was made, even though it's a requirement in law, but we followed it through with more engagement, including what we have this morning, so that Kenyans can understand from the beginning what exactly we are doing. Now, when someone speaks like that, I think it's someone who has not understood exactly what is the objective and the intention of this transaction. What we are saying...
Sorry. As you answer that, please contextualize what government owns within Safaricom, how much of Safaricom owns, and how much is intended to sell, so that then now we can go into the objectives of the sale.
Yeah, so presently the share ownership or shareholding in Safaricom PLC is as follows. Of course, the highest shareholder, even as it is today, is still Vodacom at 40%. The government of Kenya owns around 35%. And then the public, because remember, there was IPO, which was issued in 2008, which allowed Latif, myself, and yourself, Mariam, and everyone else, if we had money to invest in Safaricom. So that is 25%. Now, with this change, it doesn't affect the other shareholding of 25%, but the government is proposing to offload 15% out of the 35%, to retain only 20% of shareholding and release the 15% to Vodacom, thereby making Vodacom's shareholding rise to 55%. Yes.
Okay. Why? That's the question.
Why this transaction is necessary?
Why is the government of Kenya selling the family silver?
Yes, so this is the reason I want to lay the foundation. We are at a point in this country where we still need infrastructural development. That's a fact. For us to realize economic growth that would create job opportunities, we need at least 7% economic growth. We are growing at 5%. Maybe next year it will be 5.3. So we are still struggling. Now, you cannot grow an economy where you have a lot of infrastructural challenges. Major roads, I will give you examples. Our largest trading partner is Uganda. The road leading to Uganda has challenges. You sometimes take a day before you move from Nairobi to the border. Our next neighbor is Tanzania. To reach the border of Tanzania, there's usually challenges because the road leading to the border, that is Namanga, is not the class of road that you'd want to connect you to your major trading partners. And many, many other major and commercially viable, so to speak, roads. In terms of agricultural production, we are over-dependent on and over-reliant on rain-fed agriculture. And we have said it before. We need to move to irrigated agriculture. And this will require investment in major dams. We have mapped out about 50 of them across the country. Energy sector, one of the reasons why investors find it hard to come to Kenya is because of the cost of energy. And that is affecting direct foreign investment. Energy generation and energy transmission is a challenge. You need resources to do that. Our airport looks like that of the 1950s compared to other countries. And we have attempted through PPP, it didn't work. So what I'm saying in a nutshell, we need investment in infrastructure. But how then do we finance these infrastructure projects? Either by raising taxes, which is not an option because Kenyans already feel that they are overburdened with taxes. So you can't go that route unless you want to cause a civil unrest or unless you're just not concerned
so
about
this
the
is the route
people.
that's the best one to take.
Let me just build my point, Janet, because I think we are losing the point here. We are losing the objective of this transaction. Now, the second thing that I would say is if you can't raise taxes, then you borrow. Is there space for that? There is no space for that. So what you are left with is you have to look for other innovative ways of raising revenue, which are not debt creating. And so we have this mature asset, so to speak. What we are trying to do is what one would call in economics, unlocking value of a mature asset. Now, we have this mature asset. And this is an asset that we could easily convert. So what are we converting it to do? We have decided as a government to create what we call National Infrastructure Fund. If you create a National Infrastructure Fund, this fund will, if you have resources in this fund, the fund will be tasked with the responsibility or given the responsibility and mandate to implement major infrastructure projects, especially those which are commercially viable, by crowding in private sector. Private sector has resources out there. Institutions have resources, including pension funds. But how do you link those resources with our public infrastructure, whereas we know very well that public infrastructure has some level of risk. So you must de-risk that by having a fund, by having an entity, an institution that would invest in that fund and then crowd in the private sector. That is why we are creating National Infrastructure Fund and Sovereign Wealth Fund. So how do you get seed money for this? The government has decided that what we do is we offload some of our share ownership in state-owned enterprises and get seed capital or seed funding into this fund, which then we will use to leverage and blend with the funding from the private sector to do this infrastructure. So as I finish, the summary is this. You are converting one asset to another. Because you see, this is an asset. We are shedding off 15%, converting that asset in Safaricom to public infrastructure assets, which again are value adding to the economy and also income generating and will pay back. So that is what we are doing in this space. We are not we are not offloading these shares to meet short-term budget deficits. We are not going to take this money to finance our budget in the ordinary sense of it. That is what we have said we are not doing, because that would amount to selling asset and consuming it.
Right.
But we must also maintain what we call intergenerational wealth. And there must be intergenerational equity. We invest this for the future generations as well.
How much are you hoping to make from the sale of this 15%?
So we are going to receive, if you convert in Kenya shillings, about 204 billion or thereabouts, plus 40.2 billion, which is receiving in advance dividend, which our remaining shareholding would ordinarily give us. The
For
20%.
how many? It's dividends of how many
You know,
years?
yeah, I've been asked that question, but you can't really determine, because dividend is declared year on end.
Yes.
So year after year. So what happens is that, yes, we are receiving the 40 billion. Then Vodacom will recoup that dividend depending on the profitability of the company. So if, for example, the dividend that we would be getting by March next year is say 11 billion or 10 billion, then that is credited
to Vodacom.
to Vodacom, and then in the following year until the 40 billion is recouped. The advantage is that we are getting money in advance, and for accountants that is good news, because you are getting there's time value of money. You are getting money in advance.
Okay, so it will depend on how much at the end of the financial year Safaricom declares as dividend.
Correct.
And then you net off with
That's
the 40
correct.
billion that you'd already taken in
That
advance.
is correct. That's
now,
correct.
the 204 billion shillings, how did you arrive at the valuation of that?
The valuation of this was done by technical and people, but this is the formula that was used. First, what is the value of the shares in the open market? Because you see, Safaricom PLC shares are trading in the Nairobi Securities Exchange. There is no secret about it.
Yeah.
It is not something even to make to politicize. And so, for the past 6 months, from 31st of October, the weighted average of the share price valuation was done, and an average was found. That average was marked up through negotiation and discussion. So at a premium of about 23.6 to arrive at 34 shillings per share. So what this means is that we sold it at a premium. If you take the average price of NSE, the NSE price of the Safaricom PLC shares in the market, that is how the figure was arrived at. It was a negotiated figure. It was easy to negotiate it, or rather we were able to get this deal at a premium, because apart from being a block sale, which usually results into discount, we were dealing with an investor who is an insider, someone who has confidence in the company, someone who has been part of the company, so that it was easier to get a better deal, which I saw some people trying to say is not a good deal. But where is the evidence?
Okay. We're going to play at some point during this conversation a bite of what Member of Parliament for Kiharu, Ndindi Nyoro, former chair of budget, former colleague of yours in those committees, was saying in terms of the actual valuation of this company from his perspective. We shall hear it. But I think the other question that comes before that is, why deal with only this one shareholder, Vodacom? Is there anything in the shareholders agreement that says that the government, when government wants to sell, you talk to one shareholder? We have multiple shareholders in Safaricom.
And the public...
So I will tell you, the Safaricom has only 3 probably shareholders. There is the Vodacom now, because Vodafone through Vodacom is the same thing. So Vodacom had 40%, as I mentioned. GOK had 35%, so we couldn't sell to GOK, couldn't sell to GOK. Now there are others, the small shareholders, the retail shareholders, the public. There are a number of reasons why that was. We could not go to the public. Number one, we would have sold it at a discount, because the price of shares in the market today Safaricom shares, the highest it went, and because of this deal, is at 29 shillings per share, which is still way below the 34. So we would have got less from this sale. Number two, already we have another live transaction in the market under KPC. You cannot over-capitalize the market, or you cannot if you give more assets to the market, and they are competing for the same sources of funding, that is not prudent economic decision. So we already have another KPC also already in the market. We could not again put another asset in the market competing for the same resources. Finally, this transaction is better because if you floated it, if the shares were taken by the retail investors, we wouldn't have gotten the advantage of foreign currency inflow that we are going to get out of this. Because when you offload these shares or divest and you give it to Vodacom, they are going to pay us in hard currencies, in foreign currencies, which is also going to help us in stabilizing the shilling. And that is economically, again, prudent. So a number of reasons. And then finally, we are dealing with an investor with the capacity. With the capacity in terms of resources, capacity in terms of technical expertise. So we are dealing with an insider with technical expertise and resources.
Okay. Yeah, I just wanted to come in and ask about, and I don't know if you've spoken to long-term financial trade-offs from taking upfront payment. What do those look like from taking upfront payment instead of relying on future earnings? What are those long-term? Right. What do those long-term trade-offs look like?
To contextualize, the front page of the Business Daily. Yeah. Treasury gives up 15 billion shillings in the race for Safaricom dividends, and basically, government has given up 15.5 billion worth of future dividends from Safaricom in a rush to receive the upfront payment of the 40.2 billion on the 20% stake it will retain in the company after selling part of its shares to Vodacom. The Treasury sold the right to receive future dividends of the 55.7 billion shillings to Vodacom at the price of 40.2, effectively giving Vodacom a discount of 27.8%.
You see, first of all, you need to understand that dividend is not guaranteed.
True.
So it is the assertion there is like we have already declared dividends for those so many years. The evaluation looked at all these factors and saw that here is a good deal because if you get this money upfront, there is time value of money as well. So don't just take it that we are giving a discount. There is also the discounting or the revenue or the stream of revenue. And it is not even predictable. You can't with certainty say that Safaricom is going to make this kind of profit. This is a dynamic environment. They may even make higher profits, all right? And so you may find that when they make higher profit, you recoup quickly.
The discount is even bigger.
Well, if they make higher profits, it is the declared profit that will be, it will not be bigger because the bottom line is this, that if they make more profits and declare higher dividends, then our 20% will attract higher dividend in that case.
Yes. But then you've lost more on the 50. On the dividend that you took with this projection.
So this projection was based on the current level of profitability, which may obtain, may not obtain.
Okay, we're coming back. I know. Hold your.
But you see, but I want to also give you confidence. The details are going to be discussed. As I said, this is the beginning of this conversation. In fact, these are some of the things that will be raised and evaluated to see whether we have made the right deal. And I'm happy that already Kenyans are talking about them. That is the essence of making this move, the proposal initiation.
We're just taking a short break. We'll come back. My head has also gone to ensuring that the infrastructure fund is protected from political misuse. I think it's just about building trust and the public trust. But we're hosting John Mbadi, Cabinet Secretary, National Treasury. The title is Privatization or Sellout, and we're talking about Treasury faces the Safaricom question. We'll come back. It's coming up to 7:30. We'll continue the conversation in just a moment.
My name is Alex Ilamoya. We are fixing the nation. Nyuma yangu ni Lolodaiga Conservative. Saa tunashukuru hapa kuna wanyama wazuri sana, ni area mzuri Laikipia. Tunasi vijana msikuje kwa social media na story ya kuinside watu, hapana, mseme ukweli, mfike ground. Mimi nimeongea na locals, wameniambia problem, najua. Sio ati wewe unakuja unaanza kusema ati land yote inaonewa na British, hapana.
That is one of our funnier WhatsApp Nation videos for sure.
He was giving the Kibaki nini of apana.
Yeah, that is Alex Nyamwea, Akololdega Conservancy. Ameambia watu kujani kwa ground muone wanyama.
Ameongea na locals.
Nimeongea na locals.
Who are the locals then?
But I agree with him. Sometimes we comment on things without even having full information.
Yeah, it's true. He's saying kuja kwa ground umuone. Msiseme, oh, all this land is owned by the British. 0112 500 400 is the number to send your WhatsApp Nation video to. We'd love to hear from you. 0112 500 400. You could, for example, say, my name is John Mbadi. My bit in fixing the nation is ensuring that Kenyans have an understanding of the workings of Treasury, even something as granular as the sale of government stake in Safaricom. That's my bit in fixing the nation. Send it to 0112 500 400.
You know, when you started speaking, Waziri was like, hey, what was this? We're coming back to the conversation. Just very quick feedback from viewers. Some of it is around the same sentiment. There's two that stand out. Jose Little says Safaricom is so integrated in the Kenyan economy through their M-Pesa payment system that Treasury ought to think about the impact on the Kenyan economy, which we'll come to later, the impact on just how will it change how we use the service, how will it, I think you talked about it in the press conference, affect, say, the staff at Safaricom etc. The other one that's coming up, which maybe you've spoken to, by Farida Mbabu 166, why is Vodacom not letting the public buy the shares? Why single source everywhere and have a foreign company control our communication? How safe is our data? These are just some of the questions that are coming up on YouTube.
Yeah, I guess you can come again and respond to that, because there's that whole issue of why not let other Kenyans get involved in this. Now there's a foreign company that has 55% shareholding in Kenya's, data company.
And you've spoken to the cost. I mean, yeah, getting a better deal at 34 shillings per share. You could have sold that 34 shillings per share to the public and still gotten the better deal.
You see, let me start with Jose, who says that Safaricom PLC is actually so integrated in the Kenyan economy. And I agree. But the reasoning that we shouldn't divest because it is so important, so integrated, that is the same argument in 2008 when people were saying we should not privatize Safaricom because it is so important, communication, etc. If we retained the ownership and shareholding of Safaricom at 100% GOK, Safaricom would not be what it is today. Probably it would have collapsed by now. So, I mean, we must accept change and to move and accept advances. Because you see, where Safaricom is today, it's a technological company. 5G, the fiber optics and all that. Now they are moving to the next level of fintech and expanding regionally. You need more impetus on it, even at that level, to be able to advance more digitally. So you need more efforts put in. You cannot do business the same way. So that is what I would say in response to Jose. On the issue of single sourcing, and I want to repeat this, and Miriam, you're asking whether we could have not gotten a better deal. You know, if a company is quoted in the Nairobi Securities Exchange, you can't go and start discussing with shareholders like we have done. Yes, like we have done between shareholder and shareholder. You will have to allow the market forces to dictate the price. And the market forces we know today is 28, as of today, I think, the last price that was in the market. Now, how would you have got it? In fact, you can only sell it at a discount. So I don't think we would have gotten any better deal if we went to the Kenyan part. And I also explained that apart from that, already we have another asset already in the market. And having a live transaction in the market and bringing another another transaction, competing for the same resources, you're squeezing out. I don't know whether it would have been even possible to raise 200 billion on Safaricom and raise another possibly 100 billion from the same people. It is not workable. Now let me answer this issue or this question of are we losing control? Are we exposing ourselves to because this is a security concern.
Data
we have already cured that through an agreement that is binding, and again it must be understood that Safaricom is still a Kenyan company, and it is operating within our borders, and the legal framework and regulations still apply. All the regulatory authorities still have the force to have the powers to enforce compliance. Second, I also want to mention that the stake that we have, the 20% stake, still gives us some leverage. And if you look at the agreement, we have secured that the CEO must always be a Kenyan, and the chairman must be a Kenyan, and independent directors must have majority Kenyans. Now that will definitely retain the management style, and will retain all these exposures that you think Kenya would be exposed to will not happen. So we have secured all these concerns, and this will be public because all this information are made public, and we have started the process, and I decided to lead the process because it is the responsibility of the National Treasury to control and midwife any privatization or any divestiture.
We'll come back and look at the agreement, the 9 points, the agenda, but we do want to play this clip by Kiharu MP Ndindi Nyoro, because as he was quoted saying that it's an example of selling government assets in an opaque manner without giving taxpayers value for their money. But let's listen into what he had to say and then come back and react to it.
The government of Kenya is proposing to sell Safaricom PLC, the 15% stake, at 34 shillings. Kenyans need to know that Safaricom shares were trading at an average of 45 shillings in 2021, valuing Safaricom PLC at 1.8 trillion Kenya shillings in 2021. And of course, that is before Safaricom even invested in Ethiopia, an investment that is actually becoming a very good decision for Safaricom.
We'll hear this often, and I know...
But he's making sense, isn't he? I mean, if in 2021 this company was valued at 1.8 trillion shillings before it went to Ethiopia, before it expanded this way, if in 2021 the share was at 45 shillings, right? Surely this company is valued at more than 2 trillion shillings at present.
You know, we need some fact check on what Ndindi is saying, because he's mixing me. First, is he talking about the valuation of the farm or the share prices? These are totally different things. You know, when you value a farm as an entity, the value of the farm would be different. It is not the same as the value of the shares. These are totally, it's basic accounting knowledge. And I believe, Ndindi, what is his background? Is he an economist? If he's an economist, he should also know that I know the economists are not strong in valuation. This is the forte of accountants. But the bottom line is the value of the shares is not equal to the value of the farm. Because I saw some write-up, I didn't watch his entire interview or press statement, that he's talking about the value of Safaricom as today could be 2.5 trillion or something like that. Fine, it could be that. But we are not selling as a going concern, as an entity. Safaricom, we are offloading, we are divesting shares. And so shares can only be sold at market price. What is the present, even without talking about 2021 or 2032, what is the price of shares of Safaricom today? So what we did was to get the average price of shares for the last 6 months. and weighted average, put her somewhere, and there is a premium on top of it. Can he dispute that? Let him just calculate the price get the price, and you don't need any research. You just get the data from Nairobi Securities Exchange and see what is the price of shares of Safaricom and average it and see if because what you are selling is the shares. It's not the farm as such. So
that part is understood.
Yeah.
He was also talking about share prices having gone down over time. I think, is he alluding to, so 45 shillings a share in 2021 to now we are playing at 28, 29.
Yeah, so if the share prices have gone down,
yes,
do we go and tell these people that we have to sell it to us in the price that it was in 2020? We never know, even tomorrow it can go down further. The share prices, I'm not saying that is what will happen, but it may go down further. But let me just point out something. You know, when we are in leadership, we should also be responsible and be consistent. If you played the clip of Ndindi Nyoro when he was in Tanga group, no, before he became chair of budget, Tanga group, he told Uhuru's government, point blank, that instead of borrowing more money, sell shares in Safaricom. He actually was not even general. It was very specific. Sell shares in Safaricom, raise money, and do what you want in terms of development. That is exactly what we are doing today. And because he has gone, I don't know which group he's in. I don't understand.
But he's still in Kenya Kwanza. He's a UDA MP.
But there are so many UDA MPs who are not UDA.
He hasn't announced anything, so we assume that where we last saw him.
That's a good assumption. And again, lastly, and by the way, I wish he was here, but let me just put it. I believe Ndindi Nyoro was very integral in Kenya Kwanza campaigns and the generation of manifesto. Let him go and read that manifesto and come and tell us what is in it. The manifesto of Kenya Kwanza speaks to privatizing state-owned enterprises to raise money for National Infrastructure Fund. It is also in Azimio. At least for Azimio, I can speak with authority because I sat for days, including weekends, in a room around along Fair Acre Road in Karen, as we were working on the ODM, on the Azimio manifesto. And I know that one of our strategies was to raise money for infrastructure through privatization of state-owned enterprise. So there is nothing out of ordinary we are doing.
I feel like a lot of this is really just stemming from, one of them could be, and you're right, he's said it, he's not here. It could be off the back of just the rising debt and the government sort of seeming like they're pulling at everything to ring-fence funds, but funds are not often used as they should, which takes me to, I know you've got there's 9 conditions that were set, right, for this deal to go through. Speak to how to ensure that these funds are not then redirected to something other than infrastructure. I think this is about building public trust. Can you talk to the public now and ensure them that you can trust that this is going to be ring-fenced for infrastructure so that Kenyans benefit? Right now, the fear is that these things just tend to benefit a select few. So what part of the condition, among the 9, really gives confidence that it will be ring-fenced and used for what it's supposed to be used for?
Actually, if you look at the conditions that are in the agreement, is between us and Vodacom. It did not touch much on how we use the fund because Vodacom has no responsibility on how we use the fund. But I understand the concern perfectly well, Janet. In fact, Kenyans are right to question because this is their government, this is their asset. Whatever is the money spent on, they have a responsibility, they have a right to know. That is why in my press statement, you heard me mention that I am appealing to Parliament, National Assembly, to fast-track certain processes to set up these funds before we receive the revenue. Because the revenue, when it comes, it will go into the consolidated fund. But we want, when the money comes to the consolidated fund, because that is what the Constitution says, we have a mechanism of immediately transferring it to the National Infrastructure Fund, and part of it goes to the Sovereign Wealth Fund. The thinking in the government right now is to have a small percentage of that, the proceeds of sale of state-owned enterprises or divestiture to go into Sovereign Wealth Fund for future generation. But the royalties and what is received from minerals would go entirely into the fund. Now, the National Infrastructure Fund should get about 90% of the funding. The National Assembly, Parliament should pass the legal, the framework that would create how the money will be channeled to this fund before we conclude this transaction.
Do we have any such framework for all other, anything else that is ring-fenced within government, such that money goes into the consolidated fund and immediately goes out, or we'll be creating it for the first time?
Well, on this one, this is a unique funding model. We have other funds that have been created. Actually, we can create a system where the money is excluded from going to the consolidated fund. Parliament has the capacity to do that. In fact, National Assembly can create a fund and indicate that the money received from XYZ will go direct into that fund, thereby bypassing the consolidated fund. But if that has not been done, then the money will automatically go to the consolidated fund.
And
now,
we don't have any,
for example, we have many funds, like even the sports fund, the maintenance levy, they go direct into those funds. So there is that mechanism. We can create the same with the Sovereign Wealth Fund, and we can create the same with the National Infrastructure Fund. The Attorney General is working on the various pieces of legislation. Actually, the Sovereign Wealth Fund is at a very advanced stage of public participation. We want it to go to the National Assembly as soon as possible to be concluded. And then also the National Infrastructure Fund, the concept and the model and the structures must be set right before we conclude these transactions. Safaricom and KPC. Because those are the first ones.
How far are we with that process? You say we are at advanced stages of drafting the Sovereign Wealth Fund, right, into a bill that goes into Parliament for assent, for approval by Parliament. And then the National Infrastructure Fund needs mechanisms to operationalize it.
Yeah.
Right?
Yes.
How far are we? How far are we giving ourselves on these two?
Yeah.
Versus how far are we giving ourselves to the conclusion of this GOK Vodacom deal? Parliament is an independent institution. It's likely to do its business without any control. But I believe that in the first, maybe maximum 3 months into the new year, we should have this legal framework put in place for the Sovereign Wealth Fund and also even the National Infrastructure Fund to have clear basis and clear structures. In terms of the Safaricom divestiture, you see now it has gone to Parliament, or National Assembly for that matter. The two committees of the National Assembly will start the process, depending on how the Speaker gives the direction. Then that will take a while in terms of public participation, then it will be passed in Parliament. Then once it is passed in Parliament, then we start the process of execution. That will again take some days, maybe 90 days or so, and then we conclude, and then the proceeds come. Yeah. So the way I look at it, we are chewing the gum and scaling the stairs at the same time. Okay. I see us having these funds established before we get the proceeds from the divestiture of in Safaricom and also in the privatization of the KPC, because the two are the ones that are now in front. Okay. Yes. Let me throw in now the fears here. We have experience with other funds. You were a leader of the National Assembly in the previous administration, the previous Parliament, where it was actually discovered by Parliament that some money that was meant to have gone into the fuel development levy funds had actually been diverted by the then Treasury. The fuel development levy was supposed to go in there to be the one that comes in to stabilize the market prices when prices fluctuate. And part of the sittings of National Assembly then in the 12th Parliament was realizing that this kitty is empty. Why? The National Treasury had actually, just taken some money out of it. How do we guarantee that these two funds, the money shall never leave these funds to go into any other entity?
Actually, the government has discussed on the issue of how do we, what is the legal framework that is going to guide these two funds. And we are very clear that the funds can only be used for specific
purposes.
One is in national infrastructure. But two, which has also been embedded in the Sovereign Wealth Fund, is for stabilization. And we are going to put percentages. Now, stabilization means, should there be any external shock, like we had with COVID, we were lucky that the world came together. But looking at what is happening in the world political space today, you cannot predict tomorrow. In fact, you may be left on your own. And therefore, we should always be prepared. So we said there will be that provision. The only provision, the only exception that we will have on the Sovereign Wealth Fund will be that one. But on the National Infrastructure Fund, we will be very clear. It should be for commercially viable. In fact, we are not even going to allow money from this fund to be spent in other infrastructure projects which are not commercially viable, because then you will drain this fund.
Okay.
So that is those are the things that Kenyans will have to discuss. On the road maintenance levy fund, I think there was a provision in the law, in the act, that allowed, gave Treasury some space, but it was not right to do it. And I don't think during my tenure I would accept that to be done, even though you'll also understand, I will give guidance. You'll also understand that road maintenance levy fund is actually a fund that is managed outside the National Treasury. So if National Treasury went for the fund, it must have been with some arrangement with the board. It is managed by the Kenya Roads Board.
Which then gives like the importance of having structures to properly ring fence these funds, but there's so much feedback
that's correct.
We need to get through, and of course we still want to get to those 9 conditions just to know from a safety perspective, right? Very quickly, technology, why not wait until the share value goes up? And that's been repeated by someone else who was saying, Jose, it's 9 all. Okay, I hope that's how it's said. Says the stock market at the moment is depressed, and therefore the timing of the sale may yield low returns. Okay, Ronald Mubinya says the next regime will sell the remaining 20%, going by the rigorous borrowing by GOK. Wait to finish KPC and then sell it to the sell to the public the 15% to ensure local membership, local ownership. Remember, M-Pesa is Kenyan. Okay. Pare Wandolo says the issue is not raising funds through privatization and taxes. The issue is how those funds are utilized and the systemic corruption that follows. Skeptic says Asian Tiger did not get rich by burning wood. They pursued nuclear energy. Okay, that I think is there. Okay. Mwangi says, why sell the hen which lays the golden egg? Sell the other chicken. Right. So it's a lot of...
started with.
Yes.
I want to ask something based on one of the questions. Waziri, I don't know if this is even possible, but if the public overwhelmingly rejects the sale, would Treasury consider halting, altering? Is that something that can be done?
Why would the public reject this? You know, let me tell you.
In a scenario where...
That is why
scenario.
That's why I'm talking to the public, not reject it. Because if the public rejects, what options do we have? You can't force Kenyans with something that they don't want. You will end it there. But the truth is that this is the right direction that this country needs to take. We need some bold decisions. Where we are not in a very comfortable position in terms of our economy, and something needs to be done. We cannot sit and say with the infrastructure that we have, we can continue like that. Energy is a big concern. One of the reasons why we can't have as much direct investment into this country, direct foreign investment into this country, is because of the cost of energy and reliability of the same. That is a challenge with the generation of energy and transmission. You need to sort it. And we don't have the resources. We don't have taxes to do that. We cannot borrow more money to do it. And therefore, we must think outside the box. And this is the thinking that this government is putting forward. I've had someone ask, why sell the egg, the chicken?
The chicken that lays the golden egg.
And why don't sell others?
Yeah,
Yes,
how do you sell a loss-making institution? You cannot. Who would buy something that's not making profit? So, and this is not a sale. This is a divestiture. We are divesting shares. We still have some.
The question
but
on
if
why?
another government comes and decides to sell the 20%, and they feel, and at that point that's a correct decision to make.
Why not wait
until
the market is doing better? That was also another question.
When is that market going to be better? If we don't work on our economy to make things better. It will not just fall like manna from heaven.
Okay, we're completely out of time. There's still a lot of questions to get through. We didn't get through the 9 points, but I think this is a good way to begin the conversation.
And what if that market gets worse?
Okay.
That's also a possibility.
John Mbadi, Cabinet Secretary, National Treasury. He's been with us for the last hour. In the coming 2 hours, we'll have Momox Kenya, Life Beyond Fame, Peter Bumba, Godi Tena, and Baba Talisha, all talking about Life Beyond Fame. Yes.
And Telvin Buru as well.
Yes. He makes a comeback. Today we've had our OG fixers make a comeback. It's coming up to 8 a.m. Stay with us. We'll be back after the break.